let's move on then. So the second question, buying properties on shops. By the way, this is literally how people sent it me. So I have tried to make it coherent. So hopefully it makes sense. So buying properties on shops, can you remortgage a property on top of a shop that was bought with cash?
Again, quick answer is yes, but let's dissect it a little bit more. So what we're talking about here is residential properties above commercial. Okay, so there'll be a flat. So first and foremost, what is on the ground floor is the key differentiator here. So first and foremost, there'll be in the criteria. Can we lend on properties above commercial? Yes or no. But underneath that, there'll be sort of sub criteria on what type of commercial they're comfortable with. Generally speaking, if it's noisy or it smells or it's a fire hazard, lenders aren't going to like it. So if it's a bakery, Greg's, something like that, that's going to be difficult. If it's the ones that lenders hate the most are they don't like curries, because obviously you get the fire,
I can imagine.
the noise and the smell. Yeah. I mean, I love the smell of curry, so I probably think it's quite nice. Laundrettes, difficult sometimes because of fire hazards. So you've got to think about the type of office, type of commercial that's on the ground floor. If it's like an insurance brokers or something like that, you're going to have many more options than if it's a Pizza Hut. Do you know what I mean? So absolutely, that's the thing we need to be wary of. And then we also need to know if it's those, you get those like parade of shops, like sort of out of town parade of shops. There might be 2 or 3 flats above one single commercial unit. So we need to actually then figure out, are we directly above it, or have we got other properties in between? Because again, that's a separate criteria point. A lender might not lend if it's directly, but if it's the one above the one that's directly above, then they may lend on it. So, and some lenders might have restrictions on loan to value as well, depending on what they do on those sorts of properties too.
Brilliant. Thank you, Sam. So just very quickly, obviously this person who's brought this is for anyone looking to invest. Know your exit before you start jumping in and buying properties, obviously for cash as well. I think that's something that, we go to an auction, we see something that almost seems like a discount, but then if you're going to struggle on the back end of it, you're essentially in trouble as well.
Whenever, well, to be honest with you, this is just across the board, but if we're ever using cash or bridging finance to purchase properties that we are then going to add value to in some way, shape or form, and to be honest, I'd include auction on that as well, because that's, you would use a bridge or cash to purchase that property. We call it buy, refurbish, refinance, BRR. I always joke with my clients, I call it RRB because I do it the other way around. I'm looking at the refinance. The first thing, if I get on the call with a client, look, it's happened. It's really annoying because until fairly recently, I was able to say in 15 years of doing this, every single bridging loan that I've got a client into, I've got them back out of. Recently, we had an issue. I'm happy to say it wasn't my fault, but it still annoyed me that we did slightly go over the term. It wasn't the client's fault either. It was just just a matter of circumstance. But we'll always try and ensure we have a clear path to exit that loan. Last thing in the world you want to be is stuck on a bridge. That's the worst thing in the world. You're going to get, if you go over your term, you're going to get extra interest to pay, penalty fines to pay, all this kind of stuff. So we want to make sure we've got that clear exit. We know whether we're going to be refinancing, whether we're going to be selling the property. And even if we're going to be selling the property, have a plan B, make sure that you can definitely refinance it as well. So I go quite heavy into that really early doors with new clients. And some of them are a bit shocked by it, and they just go, "I've called you because I want to talk about bridging." I'm like, "Yeah, that's great. I'm pretty confident we'll get a bridge. It's fine. Let's just make sure we can get out of it that first before we go into too much detail."